Hello and welcome to Seeking Alpha Interviews. I'm Jane King at the NASDAQ market site in Times Square. With me today, John Mason, Seeking Alpha contributor. And we've had a little chance to talk a little bit about your views on macroeconomics. And oh my goodness, you have so much to share. So let's get right to it. Let's talk about the U.S. economy. How do you see the U.S. economy? We've seen several record highs in stocks. What's your take on where we are right now?
Well, there's very interesting things that we have to consider about the economy, and I'm not sure that some of these have really filtered into the mainstream as far as economic thought is concerned. We've gone 7.5 years in the current economic recovery. We've got a compound annual rate of growth of 2.1%, which is the slowest recovery that we've had since the Second World War, but also, which is interesting, in a couple months, we will have had the third longest recovery since the Second World War. The other thing, though, about this is how it fits in the pattern of United States growth. And from this, I would just recommend for listeners that there is a wonderful new book out by Robert Gordon called The Rise and Fall of American Growth, where he traces American growth over the last 150 years or so, and it says since 1970 that America has entered into a slower growth period, of which, of course, the last decade would fit within that particular category. So what's happening here? We're only growing 2.1%, and yet we see the Trump administration coming in talking about that they'd like to get growth up into the 3–4% range over the next 4 years. And the real question is, can that happen?
Well, that is a big question. I mean, he's talked about tax cuts, regulations being lifted. That will surely help the economy.
Yes, it will. But how will it help the economy? The thing, at least from the growth side, that economists concentrate on is the growth in labor productivity, which has been just a little bit over zero for the last decade, and growth in population. Well, if growth in labor productivity is not increasing, you're not going to get growth in the economy, just because population growth has slowed down a little bit, but also there's been huge changes in the labor force. The participation rate, as you know, is down around 63%, which is what? You have to go back to the late 1970s before you get that low a participation rate. So there's really a structural problem here as far as, in addition to the problem as far as do we have sufficient aggregate demand. So these are questions that really need to be addressed, and yet there's a political problem.
Yeah.
Education,
yes,
retraining, and other things like that take years, and politicians want something that will get them reelected in 2 or 4 years or 6 years.
Yes. Well, and part of it too is that we have become accustomed to certain things. Education being the way it is, you know, and that slows down change. So that's going to make progress or change even slower.
Yes.
You know, so.
And it all gets into the question of what causes productivity to increase. Is it just innovation? I mean, you go back and look in the 90s, and I think people were looking for a golden age in terms of productivity increases because of the information technology revolution. Well, we've had or are in the middle of that technological revolution, and yet we're 2.1% rate of growth of real GDP and next to no growth in labor productivity.
Right.
Well, what's happening? Well, you have to go back to automation and some of these other things that are going on. There's a wonderful article, op-ed piece in the Financial Times yesterday talking about AI and the influences. How, in terms of gross domestic product, do you measure improvements in technology like that, using AI rather than humans and the like, and this is just a really big problem. Are we measuring things correctly? A lot of people are saying, no, we're not. The economy is really growing faster than that. How do you measure it? But we've always had that problem, Jane, at least in terms of my career. Remember, there was an issue of whether women stay-at-home mothers, should they be included in the productivity of the United States or any country?
Yeah.
And so we got now the greater amount of women moving into the workforce in the 70s and 80s and the like. One of the reasons why the labor force participation rate was going up at that particular time. What's happening? Well, you went from one area, the home, which was not being measured. These people entered the workforce, they were being measured. So a consequence, you get into that. So, you know, there's a real question anytime whether we're measuring appropriate for the technology and the cultural makeup of the society.
Sure, and if you're not measuring correctly, how can you really know where you are and where
Exactly.
you need to go? So, but
Exactly.
these are all questions for people much smarter than me, I think. Well, let's talk about the U.S. dollar. It has been getting stronger as the stock market has done well. Other countries have been kind of struggling. Where do you see the U.S. dollar heading?
Well, I'm a real bull on the U.S. dollar. I think the dollar is going to continue to improve. This morning, the last I noticed, the dollar was down to, it cost $1.05 to purchase 1 euro. Okay. That's down from $1.07 a couple weeks ago. So there, to me, and I've been writing about this regularly, the market seems that every time it gets the chance, it moves the dollar stronger. Mm-hmm. And then what's been happening over the last couple months, for instance, you've had Trump trying to talk down the value of the dollar. Then you've had others within his administration trying to talk down the value of the dollar. So you get some rebound. And yet now, here we've got it bouncing back to $1.05.
It's like you just can't keep it down. It's like a beach ball or something underwater.
That's my view of it, Jane. And then you look at specifics and you look at what is going on, for instance, in the Eurozone. You mentioned Brexit, but we also have a populist movement with Marine Le Pen in France that is now leading the polls in France. There are some reasons for this that they say that she is now leading, but the fact is she's leading, and part of what she's talked about is that the French debt has to be totally restructured and leave the Eurozone. What is that going to do in terms of the euro? Okay, and that's not the only place. Even in Germany, they're having
that's right.
little bits and pieces here of populist uprising that's going on, which is causing a little bit of nervousness going on in Germany. Then you've got the Netherlands has an election. Right. There's talk going on there. And it looks like, and I would bet on this, it looks like Italy's going to have an election this year. That Renzi would like to get, former Prime Minister Renzi would like to get back into power there, but it's not altogether clear that his coalition is even going to hold together to get them, which election would be called. And there is a very Beppo, I forgot what his full name is right now, but the comedian who has the five-star movement in Italy, and that's gotten stronger. Yeah. And so you've got the possibility in Italy that you may have more of a leaning that way. And then there's always Greece. I mean,
right. Greece is kind of always lingering.
Exactly. Yeah. And they've got a big debt issue that is coming due in July. I know the IMF and the Eurozone is working to try and get this taken care of without a major bailout taking place again. But Greece is another problem. Now, my point is, with all these things going on, do you think the euro is going to get stronger in the face of that?
I can't imagine so, yeah.
No.
Right.
And that's what I think here. So you've got things going on throughout the world that it's not just the U.S. that is pushing for a stronger dollar, or the Federal Reserve that's pushing for a stronger dollar. It's all these other things going on in the world that are causing
Yes.
monies to come to the United States.
Well, let me ask you this, and if you could answer in 1 minute, with everything going on in the world, if a baby being born today, what would be a safe place where that money could grow for a baby over their generation? What kind of mixture? Yeah, I mean, would you U.S. stocks, combination of bonds?
I mean, still the three strongest areas for that has been the United States, Germany, and Great Britain.
Okay.
And those have been really where the risk-averse monies have gone. I'll try and be real quick on this. I mean, the United States, since the upheaval in Europe, 8 years ago or something like that, has had millions of funds coming to the United States that has been risk-averse money that are basically seeking a safe haven here in the United States. If we can keep those monies in these safe havens, then that's the best place in the world still to invest. But guess what's happened? And I've written about this in Seeking Alpha as well. Since November, we have had money leaving the United States. The safe haven money is going elsewhere in the world. Where is a place that you can find this? Very interesting place to look. The Treasury's inflation protected securities area is a place to look to this, because as the safe haven money came to the United States, the yields on these tips went down. The 5-year was down for a year and a half below zero in terms of yield. The 10-year has been below zero for a good portion of this time. Well, guess what? Since November, the yield on the 10-year tips has gone up by 30 basis points.
Wow.
So in terms of the run-up in the longer-term Treasury issues, not only has inflationary expectations start coming back, but also you get this increase in the real rate of interest by 30 basis points. So you get an increase in inflationary expectations by 30 basis points, an increase in real interest rate by 30 basis points. You've got a 60 basis point increase in the long 10-year Treasury yield.
And that's just been in a short amount of time,
and that's just been in a short amount of time. So that's how volatile this world is at this present time.
Interesting.
And
you have
what's
to come
going to
back,
happen?
and we have to talk about politics and everything else. So, because there's so much that you have to share. I know.
No, what's going on. It's a real tipping point in my mind. The world has changed.
Yes.
And it's going to change even more dramatically in the next 5 to 10 years. And investors, even just as you suggested, you're going to have a child. Where do you want to be with that child?
Diversify. Well, may you live in interesting times, because I think we certainly are these days. Thank you so much, John,
well, thank you, Jane,
joining us
much.
today. John
Enjoyed.
Mason, Seeking Alpha contributor, and thank you as well for joining us on Seeking Alpha Interviews. Have a great day.